If you feel like home values jumped overnight, you're not wrong. In the past 5 years, we've seen one of the biggest increases in home values in the history of real estate here in the United States. And today I'm breaking down exactly why that happened. There's not just one reason. It's really a perfect storm of a bunch of different things that kind of came into play all at once. Supply, demand, interest rates, and a little bit of a change to the atmosphere that we were looking at. Hi, I'm Elyse Moore, and I've spent the last 10 years helping people in Plainfield, Oswego, and the surrounding areas make great decisions about real estate. There were 5 main core reasons that caused this. Number 1, record low interest rates. So in early 2020, right when COVID happened, the government basically decided to artificially press down interest rates in order to keep the economy moving during that period of uncertainty. So what had been an average interest rate of 5.5% to 6% for a decade, all of a sudden dropped down to sub 3% range. That drove demand absolutely upward nearly overnight. Reason number 2 was we had a massive shift in demand. So along with the interest rates that COVID brought along, it also brought along a change in behavior. So all of a sudden we had people that were working from home, people that didn't have access to the social environment they were used to. They didn't have access to the recreation and leisure that they were used to. So their behavior was changing. They needed to work from home. They wanted more backyard space. Maybe they wanted more privacy. We saw all of a sudden a whole huge portion of the population change the way that they lived. Number 3 is low inventory. We just didn't have enough houses to sell. Because of that, when there's not enough houses and there's a lot of buyers, prices go up. The reason we didn't have a lot of houses to sell was multifaceted, but one of the biggest things is that there was just uncertainty. And so people that were already squarely in a quality built suburban home, especially if they had the option for a work from home space, maybe an extra bedroom or a finished basement or a den, they were staying put. They weren't moving. They didn't know what the economy looked like. They didn't know what the marketplace looked like, and they didn't know what jobs looked like. So they stayed put. Number 4 is what I like to call the lock-in effect. And so this has been plaguing us really since interest rates dropped really low. What happened when interest rates dropped really low is all of the homeowners refinanced into those super low interest rates. Because of that, the delta, the change in their monthly payment from their super low rate into a current interest rate was painful. And so you had a lot of people that maybe wanted to move, that traditionally would be selling their current home and upsizing. They're just staying put. It doesn't make sense for them to take on that massive change in payment. And that's why we are continuing to have shortages in supply even today, even though we are now 6 years post-COVID. And reason number 5 is kind of the silent one that's living behind the scenes here. And that is the fact that we just underbuilt homes for nearly a decade. So in 2008 and 2009, when the housing industry really fell apart, new construction across the country, not just in Chicagoland, stopped nearly completely. And it didn't really start again until 2019 or so, which means that we spent an entire decade not building any new homes. Because every year that traditionally is a huge portion of the properties that are sold, we were just building up this shortage in properties. And when all of a sudden interest rates dropped to next to nothing and everybody's needs shifted nearly overnight, you had this massive flood of buyers to the market with not enough homes even in existence, let alone coming on the market. And because of that, you had a severe mismatch in supply and demand that then led to prices driving up significantly over the period of mid-2020 until really early to mid-22. So all of these things together kind of created this perfect storm. We had interest rates at record lows. We had a change in buyer behavior and thus an increase in demand overnight. We had a lot of sellers that were locked into interest rates that they weren't going to say goodbye to. And we had a decades-long backlog of properties available to sell. All of those things came together to create this vortex that drove prices up significantly from mid-2020 until early 22. Now, here in Chicagoland, we still don't have enough houses to sell. We still have a mismatch in supply and demand, and we're still seeing property values climb. It's not quite as significant and it's not quite as fast as it was in that period, but it's still going up. So what does this actually mean if you're looking to buy and sell in 2026? For buyers, it's less chaotic than it was in 2021, but not by much depending on the segment that you're buying into. We are still seeing properties that are selling in the first weekend. A lot of these properties are having multiple offers, and a lot of times we're pulling out all the stops and starting to take properties as is, or offering in appraisal gap coverages, or any of these other little nuances that we started using in 2021 to secure the deal. So what happens next? We're not seeing the rapid appreciation that we did of a few years ago, but unless something comes in that drastically changes the mismatch between supply and demand, prices are going to continue to hold strong. If you're trying to figure out what this means for you specifically, whether you're looking to buy, sell, or just planning ahead, we're always happy to take a look at your specific situation and have that strategy conversation. Our information is in the link below. Feel free to reach out.